So how would you like to be profitable at Betfair trading this year? Well, of course you would. I'm guessing that's why you're watching this video. And what I'm going to do in this video is talk to you about the specifics about how you can actually be profitable. And we're going to talk about that on a number of different levels, because it's the same stuff that I do year in, year out, and have done for over 2 decades. And the interesting thing is that pretty much anybody can do it. But when you look at most of the advice that's out there, people are approaching it from the wrong angle. They're always looking for this magic system that's somehow magically going to print money, when in fact your objective is a lot simpler than that. It sounds daft, but actually you don't need to have some sort of magic system within the market. There's sort of very clear, pragmatic ways in which you can actually get profitable. And if you're not profitable, or you are profitable and want to enhance your profitability, then hopefully I can give you some insight into this video about what I do, why I do it, and why I've had another profitable year. So yeah, let's explore that in this video. I've been successfully betting and trading for over 2 decades. If you want more videos like this and you want me to describe more of what I do, then give us a like. If you want to talk to like-minded people, visit the Betangel forum where you can do exactly that, but also visit our website where you can download a free trial of Betangel. So we need a place to start out when we're actively trading. So you'll probably pick a sport and you'll probably pick a strategy. It's important to define what you're going to do. You're going to, when you have a trading plan, you're basically saying, this is what I'm going to do, this is when I'm going to enter the market, and this is when I'm going to exit the market. And it could be I'm going to exit for a profit, or it could be I'm going to exit for a loss, but you have that basic structure in place. You need to know those things before you even go into the market. So you have in your mind a little trading plan, and off you go. So where you first should start, and I know this is going to sound a little bit strange, is you should start trading at random. That's exactly what I did when I first turned up to these markets. And the objective for me was to find out how often did I win, how often did I lose, how much did I win when I won, and how much did I lose when I lost. And using those 4 metrics allowed me to understand what was going on within the markets. And then I could focus on getting that strike rate up, reducing my losses, doing all of those things, because that would nudge me towards profitability. So when you look at the market from a general perspective, trading it at random may sound a bit daft, but it will give you that level, it will give you that benchmark, the hurdle that you need to overcome in order to become profitable. And then you can start looking at ways of improving that. So if you want to increase your strike rate, you basically get into slightly better positions. And if you want to reduce your loss, you need to figure out, when a position, it looks like it's about to turn bad and what you're going to do specifically about it. If we trade at random, the biggest loss that we can expect to make is going to be break even minus commission. There'll probably be a little bit of slippage in there as well. But basically, if you stick to a very consistent plan and you do it totally randomly, with the odd exception, but generally speaking, you shouldn't be in a situation where you're going to lose large amounts of money. Once you have that base level in there, once you're working to a particular plan, then you can begin to pull and adjust those levers accordingly in order to make yourself profitable. The example that I've used before is when I was in San Francisco once, I went into a shop and they had a Galton board. And a Galton board shows you the standard distribution, the normal distribution, which basically says that if we look at it from a trading perspective, on one side we've got losses, one side we've got profits, and they balance out over the long term. But of course we have to pay commission. So in fact, we would lose a little bit of money in the longer term. And what we're trying to do is we're just trying to tip that in one direction, ever so slightly in one direction, in order to gain slightly more profits or reduce our number of losses, 1 or 2, or preferably the both of those at any one particular point. And fundamentally speaking, that is what is going to get you profitable. A lot of my trading is done like this. I accept that the market will do whatever the market wants to do, and my task is to work within it to basically allow myself to be able to get some money out of the market, but slightly more effectively than a complete idiot could do. That's fundamentally what I'm looking at most of the time. I know that sounds a strange thing to say, but that's fundamentally what I'm trying to do. I'm just trying to be slightly ahead of the crowd, do slightly better. That is good enough, because once you begin to achieve that consistently, you can begin to grow your staking in your bank to much higher levels where those amounts start to become worth it. When you first start out, it's unlikely that you'll be able to immediately do that, and you won't be using large stakes, so the results won't look that impressive. But if you do it consistently over a period of time, you will get to that point where it becomes very worthwhile. So I get why people are skeptical about whether you can make money trading, whether it be betting, Betfair trading, financial markets, anything like that, because there's a whole industry set up to serve people who are looking for advice on how to do this. And unfortunately, 99.9% of those people have never done it themselves. So I totally get why people are skeptical. But there's an underlying truth with real trading that will describe to you exactly where the money's coming from and what your true objective is. When you look fundamentally, when people try and ask me to describe where the money comes from, I say, well, effectively, I sell volatility. That's what I'm doing. And they go, well, can you describe that to me? So let me give you an interpretation of what I see as selling volatility. If you've got the price on something that starts over here and it finishes over there, if it followed a straight line, then there would be no money to be made when trading. Although in reality, there's still money to be made that way, but that's another video altogether. But generally what happens is the price meanders all over the place and then settles at this price over here. And it could look like that, it could look like that, it could look like this. But basically that volatility that you see there is your potential profit. And your role as a trader is to go into the market, commit money to the market, make a little bit of profit, and then take it out again. And that's how you capture that value that occurs in between those two price points. There was a great graph that I posted on Twitter, I can't remember when it was, earlier this month, where it was a horse race where the price was here, and then it was there, and then it was here, and then it was there, then it was here, then it was there. And, in between all of this, the market ended up at exactly the same point at which it was. So each of those little moves that you see in there is potential profit. And your role as a trader is to go in and capture some of that profit at a risk that you deem acceptable to your trading plan. If we look at the tennis today, there's an amazing match between Kokkinakis and Murray, and they both traded at 101. And you're thinking, well, yeah, so what? Well, if you do 1 divided by 101, then you get 200%. And yet there was only one of those people that could have actually won that tennis match. And as a consequence, when you look at that, that sort of describes it as well, because it's basically saying there was a massive amount of variability between when we didn't know the outcome of the winner and when we actually did find the winner. And that isn't taking account of all the little things that happened during that particular match as well. So I remember going to a financial markets event many years ago. It's probably 25, 30 years ago now. And they said, your role as a trader is to basically go into the money with a trading bank of some sort or a stake, and then to effectively take money out of the market. And that's effectively what you're doing when you're Betfair trading. The market starts at one point, it finishes at another. There's a lot of variability in between the two. And your objective is to capture some of that at the lowest possible risk. So the interesting thing is that trading is about taking risk, not avoiding it. Lots of people get this wrong. They come into trading maybe from a matched betting background, or maybe they're over analytical and they're trying to eliminate all risk from every particular scenario. And that is not trading. Trading is about taking risk. And the way that you tend to do that when you're Betfair trading is you're anticipating that something is about to happen. It could be that a tennis player is 2 sets up and a breakup, and you're sort of thinking, well, the other player's going to come back into this in a minute. It could be you're looking for a goal in 15 minutes, or it could be that the price on a horse has come down and you're expecting it to bottom out. But basically what you're doing on each of these occasions is you're saying, okay, this is where I'm going to get into the market. This is what I expect to happen. And this is the point at which I get into that. You don't tend to do it after it's happened because, of course, everybody can see that. So typically you're anticipating that something is about to happen within the market. And of course, that means that sometimes you will get that wrong. So it's important to understand and come to terms with the fact that you could lose and what you're going to do when you do lose. I've done a video where I actually trade the same trading style absolutely identically on 2 different races. One I win on and one I lose. And you see the way that I change my approach on both of those in terms of what I do. But fundamentally speaking, I'm anticipating that something's going to happen. And in one market it does, and in the other market it doesn't. So you must remember that fundamentally speaking, one of the things that you're trying to do when you're trading is you're actively trying to take risk, not avoid it. And you're doing that by anticipating that something is about to happen. You get better and better at that over time. I can look at races tomorrow and tell you roughly what I think is going to happen. But the closer I get to the start of the race, all of the confirming things fall into place. And, when you look at Betangel, we've improved your ability to be able to understand what's going on with the market. There are so many features in there that we've designed so that you can say, aha, I can see what's happening here, and there's a build-up of money there. Or in tennis, you can say, well, this is the lowest point it's going to reach, but if it gets a break, and on Soccer Mystic, you can see where the price is likely to go within a football match. All of those things are designed exactly for that sort of scenario, where you sort of say, okay, I can see what my trading window is here, and this is what I'm going to do in anticipation of that. So yeah, never forget that trading is all about taking risk, not avoiding it. And the way that we built Betangel is to help you improve your ability to do that. You're just trying to be slightly ahead of the market, and that's often more than you need in order to be long-term profitable on those particular strategies and those particular markets. So when you're actively trading, it's important that you set yourself a reasonable objective. So here's one for you. I want you to make £100,000 next year. And I can hear you saying, well, that's not a reasonable objective. Well, it depends how you look at it, doesn't it, really? Because if I said to you, I want you to make an average of £1 per market, and I want you to trade 100,000 markets, that sounds pretty reasonable, making an average of £1 per market. And that was how you would achieve that much, much larger total. So even large totals can become much smaller ones if you approach it in a different manner. And that is my approach to all markets. When you're actively trading, it's going to sort of go plus 30, minus 20, minus 50, plus 100. And, the markets are going to do that. Your results are going to be sort of scattered all over the place. But as long as you're focused on the process, you know what you're doing and you're knowing why you're doing it, there's no reason why you wouldn't get that payoff over the longer term if you do a large number of events. So one of the ways that you should set your objective is if you say, I want to make £1,000 next month, you shouldn't say, I want to make £1,000 next month. You should say, I'm going to trade 1,000 markets and my average result per market is going to be £1. That is much more achievable, and it allows you to come to terms with any bad runs that you get, any mistakes that you make, and you're not desperately chasing that target as you approach the end of the month because you're averaging it out over a period of time. So setting your objective this way is a much more sensible way of doing it. It allows you to come to terms with what you're doing. It's more achievable, and you'll find it will just be beneficial from so many other particular aspects. And especially we're in this age of automation as well, there's no reason why you couldn't multiply up strategies by putting on a little bit of automation, trading manually, or maybe having multiple things running on multiple markets at the same time. It's up to you how you want to do it. But it makes those bigger targets much more achievable. Now, if you're interested, last year, I'm trying to remember off the top of my head, I traded somewhere around 42 to 43,000 markets last year. So you can do the maths on that. You can tell, there would have been some losses in there would have been some profits, but overall, I would have absolutely definitely ended up on average on those markets. And you can see how when you do numbers like that, you can end up with, a very, very good year, despite the fact that maybe even the individual numbers are quite small. When we get to the big events, I'm always going to push those really hard because those are where the big amounts of volume are. But a lot of my results come through all of the itty bitty stuff that takes place over the course of the year. It's just the volume of the markets that I'm trading that make a significant contribution to my year-end total. So some key takeouts from this video. Understand your true objective. When you use a strategy within the market, how often are you winning? How much do you win? How often are you losing? How much do you lose? Because when you understand and measure those objectives, that will tip you towards profitability because you can then begin to improve all of those metrics. That will get you profitable. If you're worried about, is trading profitable? Don't worry about it. It is. And the reason that it's profitable is when the market looks efficient at the beginning or the end of an event, you're worried about the volatility that is occurring. Well, you're not worried about it. The volatility is the opportunity when you're actively trading. And your true objective as a trader is to go into the market, sell some of that volatility, and then exit the market with your stake. That is proper trading. That is how you would make money. And it takes advantage of that variability that you get with any particular sports event. Trading is also about taking risk. It's really important that you understand this as well, because you're going to do something not after it's happened, because of course everybody can see that. You're going to be in the market, you're anticipating that something is going to happen, and you're getting ahead of the market based upon all of the stuff that you can see and the potential payoff on all of those sort of things. So yeah, true trading is all about taking risk, jumping into the market before the market can act upon it. And when you look at most sports events, they're judged by time left, this current score and stuff like that. But as a trader, all you're doing is you know where that opportunity is within the market. You're just timing your entry to take advantage of that particular opportunity. But also you want to set realistic objectives as well. If you set too bigger objectives over a shorter time period, it forces your hand psychologically and whatever you're trying to do when trading. So if you have a decent objective, then spread it out over a period of time. That will make it easier to cope with the ups and downs of any true trading strategy. And it will also help you achieve that higher objective, despite the fact that on an individual basis, it doesn't seem that much. Those are the sort of things that I recommend you do if you want to be profitable as a Betfair trader.